Some days when we meet and do the pre-market show for people on the Stock Trader Network, we say it's kind of out of earnings season. There's nothing to talk about. What are we going to talk about? What are the analyst ratings? Not today, folks. Unprecedented rug pull in the markets yesterday. Volatility extraordinaire. This is when we're at our best on pre-market prep. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's get the charts up here and take a look at the markets. Perhaps the most violent move in the history of the S&P 500. I'll go back COVID. I'll go back financial crisis. I'll go the great crash of 87. I'll go to depression. I mean, there you go, folks. Unprecedented move, but hey, we're quieting down. We're only down 194 handles here at 55.18. The buck taking it on the chin. Very important effects of the dollar on these European stocks. We'll talk about that with Christian. Pulling back down nearly $2. The futures 101.52. Flight to quality. All those bonds. The TLT up $1.27, 92.70. Crude down $5. USO under 73. Gold. Got a hit heading the exits in gold. GLD down 317 at 285. Silver, the perennial laggard, down $1.31 at 29.45, and Bitcoin futures, they're down $4,000 at 83,300. Let me remove my charts. Let's bring on Dennis. Let's bring on Christian. And Dennis and Christian, I'll start with you, Dennis, and you can say, Christian, Dennis, have you ever seen a move like that? Have you ever seen the S&P make a move like that?
I don't think I've ever seen such a violent turn so quickly. Like even during the financial crisis or even during COVID, we started, you had some violent moves. Don't kid yourself. There was down 10% days, but to be up, and we were up substantially when he started speaking. Me and Brent were covering it live in the STN room, and we were trading up at 571 on SPY. So we were up about 50 points. And it was because we know why. And by the way, good morning, Christian. We know the Wall Street Journal came out with, that's going to be 10% across the board. And everybody was very excited. And they were buying up stocks. And they're like, this is the best news ever. It's not 20, it's 10. And they were trading up. And he was talking for a bit. And the markets were getting bought. And everything was going good. And everybody's like, rah, rah, bull, yeah, And then he came out with that first slide and talked about the 32% or 34% on China. And the market immediately, and I am talking within 10 seconds, we went from down 50 points or up 50 points, up 50 handles to down 70 handles, like 120 point fall in about 10 seconds. It was so fast because it was like the complete rug pull. People were looking and they were like, this is not 10%. What's up? And then the next one, and then I was showing it, and the next one, they're like, what's going on? None of this is 10%. None of this is what we had talked about, what was rumored a few minutes ago. And then the full panic started, and they couldn't stop selling them. And they just started selling and selling and selling and selling and selling. And before we know it, we're where we are now, down 200 S&P points after being up 60. So we're 260 points from where we were trading at last night, lower. And this is because obviously the 10% just was a number that, some countries like the Herd Islands with the penguins living on it got, but everybody else got more. It was incredible to watch. Christian, what were you doing? Where were you? You're on mute right now. Where were you when he pulled the rug?
Yeah, I mean, I think that initial reaction that you described. Good morning, everybody. By the way, I think that initial move that you described, it was a question coming into that event yesterday. By the way, would have been very interesting if they would have done that at 3 o'clock rather than at 4. But
Oh my
uh,
gosh.
it's very interesting that they changed the time of the meeting. But I think the question was whether you were going to get low T, so tariffs, but low tariffs, or this is how I nicknamed them anyway. Yesterday, I was messing around with different ways to call it, and or if you were going to get big T. And I think at first you got the low T reaction, and the market started to kind of move higher. Um, I was very lucky with a couple things because I had gotten long Tesla yesterday on when that headline crossed that Elon, which we know Elon is only going to be working with Doge for so long. But
Yeah.
when they started to say like, hey, they're wrapping that up, I went
Yeah.
long Tesla on that,
Great call.
both calls and stock, and which made my day yesterday.
Nice.
But I had sold. It was trading up it traded all the way up to 290. So I wasn't messing around with some of the moves that happened initially, and I'm like, hey, I'm putting that money in my pocket, which, by the way, has been like the way to trade this market. So I was like, okay,
For sure.
I didn't sell all of it, but I took my third target for the day. I usually take 4 targets in a trade, so I'm still left with a little bit. But going back to what you're saying here, I mean, it was a huge move, and a very, very large reversal to the downside. So, yeah, and we're still kind of like looking for basically a footing, I think, this morning.
It,
I have to be honest with
Joel, where
you,
were you?
man. I was with my accountant.
Were you
I
counting
picked
your money as a
the
solid value?
absolute. I Oh man, it was brutal meeting, and I don't want to think about it right now. I mean,
Were
it's
you
okay.
taking tariff write-offs or as it was going on?
I oh so of course whatever. I have stack of papers. I mean whatever. Everyone knows what it's like to do taxes, and of
Horrible.
course I have the spoos up, and I'm like, he went light on tariffs. I couldn't believe it. I couldn't believe it. The
Yeah.
move. I'm
Yeah.
like, he backed off on everything, and then I'm like,
Yeah.
no, 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 he didn't. They're worse than expected. My accountant's looking at me like he knows how crazy I am, and then I just
You're
was like
talking yourself.
my jaw. I mean, I was like unbelievable, and the only thing I could think about was Dennis talking about it in trading, which I don't know how that's humanly possible.
Oof. It wasn't
Uh,
very. It definitely is difficult. I was
yeah,
trying to trade it live, and it was very difficult. You're trying to
I
hit bids. You're first, so you're caught because you're like, oh, I'm trying to buy as we're rallying up. I'm trying to lift offers, and then all of a sudden it's like, pop, pop, pop. I'm like, oh my gosh, and I was like, I've never seen such a big. And I'm just like hitting bids and trying to get out of stuff, and then trying to get short, and I'm like, you're trying to spin like it totally was a head fake. The algos really, really got head fake. Me as a human being, the algos are hitting me because I'm slower because I'm a human. So they really got head fake there too. I couldn't believe the violent move. It was
did
down.
you go for
It
the move
swung
up
100
though?
points in about 2 seconds.
Did you go for the move up? Did you try
Yeah,
and
I was
go
trying
for
to buy stocks. Yeah, yeah, yeah. And then all of a sudden it's like, whoa, rug pull, sell, Sportimer, sell, get in there, sell. I'm actually lucky I didn't get run over. So yeah, it's like you got to flip really fast. That was a violent swing, so violent out of nowhere, and it came right with the first slide. Brentster, if you can show those slides again, we want to dive into a little bit of detail here and really analyze it because it's definitely not 10% across the board. And to your point, Joel, it was much worse than the market expected because they were expecting in the worst case 20% across the board, and it's higher than that for a lot of countries. So, and the way they calculated this is just like weird. So, it was Twitter people who were figuring out the math to this. But if you look in the first column, and I can't, I'm going to have to zoom in here. Maybe you can zoom it in a little bit there. The Kobisi letter took a screenshot of it and obviously retweeted it there. So I'm just going to try to in the first column there, man, my eyes are bad. I can't see it either. But the first column talks about what their tariffs are on us. So tariffs to the USA, I think it is. I can't read what the exact words are. If you can read it, Brent, what does it say exactly? Brent's doing in the background, but what's the first column, the wording?
It says tariff charged to the USA.
Yeah, okay. So
And
tariff
then
charge
the
to
next
the
column says USA discounted reciprocal tariffs. Discounted.
So what's so interesting here? So tariffs charged to the USA, and people are like, "What? Where the hell is this China 67% number coming from? Where is this Vietnam 90% number coming from? They don't charge those tariffs. Like, where is this coming from?" And so he's acting like, "Oh, they're charging us this, so we're going to charge half, and we're really being nice." So this isn't a tariff at all. So these first column is not a tariff. It's the U.S. trade deficit to that country divided by the U.S. imports from that country. So, for example, you got China with a $295 billion trade deficit. Well, their U.S. imports were only 438. So, when you've got trade, the exports go at 294 and imports 438. They take the 235 and then they divide it and going through. I'm messing this up, speaking it out loud, but they're basically taking the exports and just dividing it by the trade deficit. So basically the exports and the imports. So, and they came up with this tariff number, which isn't even a tariff at all. So they're saying that, 67% of the goods are actually coming in from China and we're only sending 33. So that's a 67% tariff because there are way more goods coming in than there is going out. So it's not even a tariff at all. It's just weird math. And it was really hard to even understand. Like, people were sitting here for a while trying to figure out what the hell is this number? It doesn't make any sense. So it's not a real tariff, folks. Like, tariff charged to the USA is not really being actually charged. It's just the trade deficit numbers. So
Well, and this is what made it difficult to trade too, because you're trying to understand too. We saw that big like card or whatever that he brought out, and that's what made it like, hey, wait a minute, I need to understand these moves. And like this came out, this is a great information to go over, Dennis. But this came out like people started to analyze this, and I don't know, like an hour after this, I started to see that being posted too, because it was a question, it was a question of like, where are these numbers exactly coming from? We got a nice little move off the lows. I just wanted to go through, if possible. I think there's such a big move that's happening, not only in equity futures, which of course is what we're watching, but the VIX I think is going to be very interesting to watch today, because the VIX right now, VIX futures are around 25, 26. When we get to the end of the day, it'll be very interesting to see if the VIX stays below. For me, like 25 is like kind of a psychological level. So whether that stays below 25 or stays above 25, I think is going to be very interesting for the day. But I also just wanted to mention, like, some of these moves outside of equities are huge. The dollar, for instance, is down 2% this morning. That is a huge. So I know, again, everybody's looking at the move in equities, and this is a large move in equities. But when you look at, sorry, I don't have this up in the charts, but I can bring it up.
Sure, go ahead.
Here's what the dollar's doing. I mean, these are huge moves. This is just a 1 hour chart of the dollar.
Yeah.
So, and again, like, this is, I think, where we were. I'm not sure what this move was. Maybe another reaction that happened. But look at what the crude market is doing this morning. Crude is down, I think 6 or 7%. I want to say 4.5%. Excuse me.
Yep.
Wow.
Gold, which you would think, hey, I'm gonna be great in gold. Sticking in what gold is doing. Not so much. And I think this is also one of the really interesting moves, because gold has shot up, like, has gone ballistic. I actually, in my long-term portfolio yesterday, took some profits in gold, because I was like, I don't know if we're going to get the low T or the big T. We got the big T, but this chart is extended. And I just said, hey, well, let's take some money off the table here. And gold is off 1.6%. Silver, which I've seen so many posts about, hey, it's time to get long silver. Look at what silver's doing this morning. That's not the trade to be in at all. And that's one of the biggest things that is getting hit this morning. Silver's down 7% right now.
Wow.
So, this is not only difficult to figure out what you're going to do in equities, but commodities, which have been kind of a nice little trade to be in. I don't know where's copper. Let me see what copper is doing this morning. because that's also, has gone up. And look at copper's down 2.8. So all those people who are really bullish on copper, who are thinking like, oh, the market's okay because copper's going up, wrong, because copper's moved up because of tariff anticipation, and that's down about 2.8%. So there's a lot of moves going on in macro. I don't think we even covered international, which the Hang Seng is, by the way, not down that much last night. The Hang Seng down 1.5%. European markets are down. Euro stocks are down 2.8%. The DAX is down 2.2%. Some of the ETFs are not down as much. We were talking about this a few minutes ago, but because of the currency effects. Remember, whenever you're long something like FEZ or EWG, which is the German ETF, you are synthetically short the dollar. So with the dollar moving down, you'll find that these things are not down as much. So just wanted to kind of come in with what the overall macro moves are, which are pretty ginormous this morning.
This is unbelievable. Like the turn in gold, the turn in oil. Like, I mean, you look at, even the USO, if you just want to look at that, it's down 6% here this morning. So this is not just a rug pull in US equities. This is a rug pull in commodities as well. I mean, that's why people are coming in. I had like 30 messages last night. What are you buying? Tell me which stocks you're buying in the morning. Because I'm always saying buy the dip, right? And I'm like, I built a wish list in the STN room yesterday on stocks I'd like to add to my long-term portfolio, because I'm 35% cash in my investment account. I'm 100% cash in my trading account, but I'm like 35% cash in my long-term investing account. So I want to put some of that cash to work. I don't know on day one though, Joel, and I'll throw it to you too. Like, I mean, we're taking out the lows of the move. I always say when stocks make new lows, you got to go. So, I mean, it's not like we're maybe, during the regular session, we can get back to that 546.87, which we're just below it on the SPY. So maybe we can open there and try to bounce there. So maybe this is another buying opportunity. It has been a lot of buying opportunities all year on the big down moves, but there's also just so many unknowns here. I almost want to wait for a day and let the dust settle here a little bit. Instead of trying to be a hero.
I was thinking about that, Dennis, and maybe you should change the list to stocks that you want to sell.
Stocks that I want to sell.
Instead of looking to
everything.
buy,
What if it rallies? Everything.
Yeah. Yeah.
Yeah, I know.
I mean, we are so conditioned that the market is always going to go up, that they're always going to bounce. There's always going to be a rebound. But there are violent rebounds. You see the pops. But instead of putting out, like, I know there's a lot of stocks that I want to sell, and I still can't get Lisa to sell them. There's that eternal hope that things are going to get better, that we're going to bounce and we're going to come back. Right now, I don't see that path. I think we're in a stealth bear market, and we have been in a bull market for so long. I don't, and like people say, well, and we can move to this next. Well, they won't stick. The tariffs won't be as bad. I can't invest. I can't buy things on something that may happen or may not happen. Because investing in that, like people are like, what are you going to buy? What are you going to buy before the tariff things? We're in a downtrend. I don't know. And we could maybe go to investor sentiment. Christian, you wanted to talk about that. Sometimes when sentiment's in the gutter, it's a time to go and go for things. But you can be a contrarian all the while. But let's talk about investor sentiment.
Yeah, so I think this is really interesting. This is Helene Meisler has this frequently. She talks about this, especially when we're going through, a market sell-off, a correction, and in terms of like where we are in terms of the sentiment cycle. And I thought this just stood out pretty amazing to me. I know that you can't read some of these things, but basically it doesn't matter. I think looking at where a typical market sell-off happens, and this is a great point that Joel brings up about, hey, we're now, we've broken through this week's lows, but where could we be in terms of the sentiment cycle? And I was startled when I saw how closely this resembled to what the Q's chart looks like. So the left panel there, and you could see kind of where that move has initially happened, and then you go over to the right panel, and that does look awfully similar to what the Qs looks like on the right as we begin to move down. And I think what this kind of indicates is that, first of all, we may be just in the beginning stages of this type of market pullback, and I think the word that comes to mind is patience. And I think that you really have to think about more than just, which I know the investment world has now have everybody has immediate gratification. They want to buy the dip and they want to see results right away, but this
Yeah.
could really
Me.
take some time. What's that?
That's me.
Yeah, me as well. Like, and so you have to condition yourself to be like, okay, how far are we away from, how long could this really take? And I like this because it makes you think about, hey, we could just be kind of like in the beginning of this for the year, where we go down, we go up a little bit, it's choppy, rips up, rips back down, sell-offs back down. And I think it helps kind of it helps you determine your strategy about like what could possibly play out for this year.
Okay, so we really, we discussed, we hashed for 20 minutes here about what happened, right? And we all see the end result. We see the end result
Yeah.
in the futures and our stocks
Yeah.
and stuff. But we got to look forward, right? Right, Christian and Dennis. So, what's going to happen next? What's going to happen, politically on a global
Yeah.
scale? Are countries
Yeah.
going to respond?
Yeah, they are.
How? Yep. Okay.
So retaliatory tariffs are probably coming from Europe. They've already said that last night. China is going to probably do retaliatory tariffs. So the trade war is likely going to escalate in the short run. We know Canada and Mexico are too big of trading partners here, so they're trying to play it cool. So I wouldn't expect Canada and Mexico to go crazy here. And again, they weren't on this list because they already had the 25% across the board for those countries. So I would expect, this North America, Canada and the US have to walk a fine line here. They need the US and they know it. Europe and China, they can play tough. Not nearly as much trade, obviously as Canada to the US as there is to, Europe, from the US, so they can play it a little bit tougher. And I think they're gonna. I think I'd expect, escalation of this trade war with the other countries. Now, I don't know. I can't tell you on Herd Island if the penguins are going to retaliate or not here or not. And if you didn't hear, actually, so Herd Island was on the list of 10% tariffs. So they're giving 10% tariffs to Herd Island. There is 0 inhabitants. There's no people that live on Herd Island. It is only penguins. So the good news is Trump didn't discriminate. He went right across the board. He didn't even just tariff humans. He actually tariffed penguins. So I can't tell you what the penguins are thinking down on Herd Island, if they're going to retaliate, but we can definitely tell you that Europe and China have already threatened retaliation, and I'd expect it coming. So I think some escalation in the short run might happen here. I do think there will be a deal, to Christian's point too, the art of the deal. You've talked about this, negotiation tactics to try to get, and the end result though, what does he want? He really wants the trade deficit to come in. So, I mean, in order to do that, he might have to go through this process here. So I don't know if he's just going to scrap it. I don't think he's going to just say, oh, I was wrong. The market's down too much. And that's it. So I don't know if there's going to be imminent relief coming here.
I did hear that the penguins are coming to the table and they want to negotiate because they're not happy.
I love that he tariffed the penguins. That is just hilarious. Short penguins. Yes, indeed. The penguins are pissed
joking
off.
aside, there's a lot of jokes to be made here, but I think that's the point that you guys are making is very good. I mean, how do you deal with? There's going to be a lot more headlines. Thailand already came out last night and said that they're negotiating. I listened to a couple. I mean, and you're going to hear headlines about what's Europe going to do, what's China going to do. Europe said that they're getting ready to retaliate, but they're also open to negotiating. So, I mean, I don't know how you really position for something like that. I think really what's important is to watch the price action. Joel made up a great point, is that we're through the lows for the week. That's really what I'm watching. I just want to bring up this chart really quick.
Sure, go ahead.
Here's the S&P. I was looking at this last night when this was going on. And I was wondering, I was like, is SPY going to hold the lows for the week? They did not. And I think that's really kind of going to be what I'm looking at, because I don't think that you could really position around all the headlines that we're going to get, probably not today, as well as tomorrow and for the next week. I think also Jay Powell speaks tomorrow. What is he going to say about all this tomorrow? But regardless, there's going to be a lot of headlines. So for me, I just try to watch the price action. I'll be watching what the VIX does. I'll be
Yeah.
watching to see if we can get back into the range. But if we stay below this range, Money Mitch was just saying, hey, well, what are, better question, what are we going to short? And I think if we don't get back above this and back into this range, and we start breaking, for new lows for the year, which is now what we're doing, then I think that you have to take a very conservative nature and lay off, buying the dip until we get really oversold again. But if we can't get so again, I will just throw out some levels here. But if we can't get above 550.85 in the S&P, then I really don't want to be buying the dip. But if we start to find some solid ground, or if I start to see a divergence, right? And a divergence means when price is going down, something else is telling us that the momentum is not that bad, hence the VIX. And if I see that VIX drop below 25, that's telling me that the market isn't pricing in huge volatility, even though the market is still on a lower footing. So levels are going to be really important. That's SPY. I find it very interesting with IWM. IWM was the first one last night to take out those lows. So that's another point. And we know that IWM has been lagging all year long. So that boom took that leg lower. Qs are kind of a little bit uncertain too, in terms of like the tariff implications. We know it's going to hurt Apple. Nvidia is down a lot this month, this same thing, but the Qs have also been lagging relative to the S&P. And I would also be watching those lows too, of where we were earlier in the week, which is like right around the 461, 462 level. So that's how I try to approach it, is to say, okay, let's just watch the price action and let's come up with a scenario. Let's come up with levels to watch to frame it, so that you're not hooked into all the dramatic things that you're going to hear from, XYZ person. And, CNBC is going to march out a whole bunch of different people. Same thing with Bloomberg, about having different perspectives about what happened. Try to separate all that with following the price action and making clear-cut decisions.
I love that, Christian. I love the fact that you're saying, hey, if we stay down here and not sniffing a rally, I'm just going to, be conservative with my approach. If we start to see buyers start to come in, get back within range, then at least we got some levels to lean on and stuff. So I'm with you here. I don't think you can come just blindly buy this dip until we start to see. And don't get head faked here, because there's so many people ready to buy the dip. I almost feel like we are inevitably going to get this like 9:30 rally where we're going to bounce a little bit. I feel like it's going to happen because a lot of people itching, guys on CNBC, analysts on CNBC, money managers on CNBC, just talking like the whole strategy for the money manager was on CNBC about an hour ago was, well, when you're down 10%, you always buy stocks because the market always comes back. And Andrew Sorkin was on there. Well, what if it's different this time? What if, and that he just didn't even, he's like, different, like he's like, the market has always come back. I mean, that's the mentality of just blindly buying the dip. And that has worked. That has been a great strategy forever. So, I mean, if your time frame's long enough, maybe you can do that. But I just don't see, let's consider where U.S. stocks are. There's still 20 times forward earnings. 20 times.
And plus, buying the dip didn't work in certain situations. If you bought the dip early in 2022, you were underwater and you possibly took yourself out of the game. And you don't want to be doing that right now. And that's the same thing. I know we've traded, I think all three of us have traded in 2007, 2008. That was also a situation where if you bought the dip, we got initial jobless claims that just hit the tape. Sorry, there's some economics.
219,000 versus 225,000. Slightly light on the jobless claims. We're chopping around a little bit here, but this is all just noise. Just noise at this point in time.
Jobs data tomorrow too. I mean, it's so small. So we got a few minutes before our guests come on, but I think there's a time we got to separate. Like, this is really bad for some stocks, and I'm trying to
Yeah.
find
Yeah.
what stocks it's good for. So why don't we do a quick rundown here? It's easier to do what's bad for stocks.
So
And I
I've
mean,
done
I'm
some
just
homework. I'll take
okay.
2 minutes just to do the homework here. Stocks that are direct impact or companies who are buying from China, buying heavily stuff from China, and obviously trying to turn around and, in the case of Apple, for instance, lots of parts for the iPhone coming from China directly in this storm here. Apple, you're wondering why? Oh my gosh, market's down 3%. Apple's down 7.58%. They're in the direct storm because they get so many parts from China. That's going to squeeze their margins, or they're going to have to raise prices, one of two things. So Apple in the storm. And I'll just, spit these off really quickly. Think about the dollar stores. Those are direct, like Dollar Tree, 11%. That store is full of stuff from China. So, I mean, are they going to raise the buck again? They've already broke the buck. Are they going to have to break it up to $2, $3, $4 to try to absorb some of this? Probably going to have to raise prices, or otherwise their margins are going to get squeezed and they're not going to be making money. 5 below, me and Money Mitch were joking last night. Is this going to have to change to 5 above? Because obviously 5 below, they have $5 stuff in the store and below, nothing over $5. It's down 18%. I don't know how that business model works. When you buy everything from China, not everything, but a lot of your stuff from China, and obviously going to be tariff coming in at over 30%, and you're going to probably have to pass that on to the consumer or operate at losses. That's tough. So retailers, all of on,
Man.
Nike,
Oh,
Lululemon, all get stuff from China, all buying stuff from China. Lulu's down 13% here now, down 38 points. So retailers in the absolute eye of the storm here. Wayfair, another one, down 17%. Christian, go ahead, but I'm just giving you a few.
And by the way, it's not just China, it's Vietnam. Vietnam's market got crushed last night, and that's where a lot of people have also decided to diversify away from China. If you remember, like the last, there's been companies that have made decisions to say, hey, let me get less exposure and reduce my exposure to China. Let me go over to Vietnam. And I believe that's one of the reasons why Lulu is down so much is I believe they get most of their products, or they do their manufacturing in Vietnam. I don't have the numbers for Vietnam, but that was also a huge tariff that was hit there too. So that's why you're seeing some of the companies in retail who have even tried to diversify away from China are getting smacked because these are widespread tariffs, not just targeted.
Okay.
So we do have our guest coming on here in a minute. Joel, quick thoughts here for the next minute, then we'll go to our guest.
Yeah. What stocks? Give me some stocks that this is good for.
Well, let's start with Apple. Give us some technicals on Apple because it's widely traded. It's the biggest component still. Is it still the biggest component in the S&P? I believe it is.
Yeah, it is. It is. Nvidia, Microsoft came in there a little bit and nipped it, but it came down, and then Nvidia made a charge and it came down. But boy, this is a level. Let's see. I mean, I think this would be a general thing. What was the low of the move? The low of the move is 208.42, and we're trading at 206.30. So instead of like trying to say, "Oh, this is support, this is monthly support," I think maybe you're in a period where you have to say, "Can this stock or this index get above this level and hold?" So right now, I'll say for the time being that is resistance because we're below it. Will we come back? I mean, the gaps from yesterday are ridiculous. I mean,
yeah,
they're ridiculous. So Apple, I would say right now, 208.5, round it off here. That's resistance. If it gets back above there over the next couple days, if you're doing a day trade, and you say, "Oh, I got to buy this at 206 and I'm going to flip it out at 210 to 11," I think you're being a little presumptuous. I think if you buy it here, 208.50.
Just want to give one more comment here on Apple. I think Joel's setting this up really well. When you take out the lows of the move, I always say when stocks make new lows, you got to go. I do think there's a trade here from the short side. People are like, "Whoa, my gosh, what are you talking about?" If Apple was to bounce, the 210, let's just ballpark it. 210 had double bottom there. I know it took it out to 208, but that whole 210 area, probably old support becomes new resistance. So if Apple's to rally $2 or $3 from here, and I mean the stock's down 17 now, so it's not absurd to think about, I think you start running into sellers. So maybe, just maybe, we got to be thinking about, hey, if we get a little bit of a rally, maybe I lay on some shorts, because, if we're deciding that we might be breaking lower range, and again, you got to give the stuff a low leash. I'm not advocating shorting stocks in the whole. What I'm saying is we got up to 550, 552 on the SPY, rally, 40, 50 handles from here. I think I'm starting to think about shorting stocks and not buying stocks. I don't think we're getting this all back today. I don't think this is the day we're closing green, folks. Like, people are saying, oh, it's going to be one of those, we're going to rip, roar, and rally in this. I don't think so. I think you want to be using an early rally to maybe lighten up. Sean Emory
Guest
in the
time.
background.
Yeah. Let's get a different perspectives. Let's bring our guest on. Sean Emory, founder and CIO at the Avory Company, investing where the world is headed.
Whoa.
We need you today, buddy. We need you. Where
I
is
need you.
Sean, so you're sitting there watching last night, and everybody's expecting 10% across the board, and then we see 32% and 29 and like 50 and 70 and all these numbers coming across, and the Penguins get taxed 10%. What's going through Sean Emory's mind as he's watching the S&P implode last night?
Yeah. Well, trying to stay away from the actual movements and trying to look at the actual information that was coming in to see where that lines up with not only expectations, but what is the the impact of that to the economy and companies that are out there. The initial reaction, again, the 10%, you're like, okay, well, that's manageable, meaning from an economic standpoint, and then two, then you start to see the big chart come out. And you're seeing pretty big numbers across specifically Asia in terms of tariffs. Now, as time went on, later in the night, right, you're starting to go through some of the the documents that came out and the filings that they put out to really understand the magnitude. And my generalized takeaway was, I mean, it sounds somewhat counter, but our perspective on tariffs is multi dimensional. It's what are they trying to do? Are they trying to generate revenue? Are they trying to negotiate? Or three, are they really just trying to be America first and isolate the US towards the global economies? And the general distinction, I'll be quick here, but is I think it number one and number two, negotiation and revenue, I think was more present after that, meaning we excluded about $1 trillion of trade, with pharmaceuticals and semiconductors and some other areas. We basically excluded from yesterday's reciprocal tariffs, Canada, which is our number one trading partner, Mexico, our second, largest trading partner. We gave a little bit of time for these things to go in. In addition to, Scott Bessent, spoke after and said, this is the top unless they, they apply, reciprocals on this reciprocals, and we go down this, tariff war. So I think there's an element of negotiation. We know 10% sounds like kind of where they want to be. If that is how you if you put a standardized floor across everywhere. And then I think the rest of the world is a negotiation tool. I know that sounds, horrible when the market's doing what it's doing this morning, but I think it became more evident, at least to us, that it was, some revenue generation. That's, you're walking a tightrope there because, you're trying to balance demand to, anyways, that's kind of our 2 cents on, what the takeaway is.
It's interesting because there were other factors going on in the market before, before this happened, right?
Sure.
And AI, the AI bubble, right? And then some people are saying, hey, this is just a correction. This is, the market's at a high valuation. Got a little ahead of ourselves with AI. Now that, the bubble has burst seemingly, and you're looking like, hey, this is going to be something, over next 5, 10, 15 years. Are you looking at AI? Are you looking to invest in the structure, or are you more interested in the software companies behind AI?
Yeah. Obviously a good question, but the hype around AI has been here now for 2 years. It really started with the launch of ChatGPT, and it's been a long time now. Like if you really think about it, we've gotten to see how people are using stuff, and I think it's very clear that AI, specifically, the tools you can use with it are pretty powerful. It's the first take was it's going to impact jobs. We haven't necessarily seen that yet. Maybe at the fringes at certain companies, making announcements. I don't know if that's a publicity stunt to sound like they're being more productive. But look, S&P margins are at all-time highs, so that's a good place to start in terms of driving even more productivity. But from the investment lens, we've been pretty adamant that at least in the early stages of any sort of like innovation, new innovation that's happening, a lot of people go for the picks and shovels first. Yet I think it's more the established players like the software names that really have already built out dedicated audience. They have nice switching costs. You think of like, I mean, we don't own them, but like a Salesforce, right? They have all the data on sales and marketing and service, and all of that is allowed to be aggregated and thrown into AI tools to then drive productivity within the ecosystem. So we think the place you really want to be long term, and I think it's always is the established software names, and then two, obviously there's going to be up and coming software names that will be like AI first, and I think that's what everyone's saying today. But that's it. I think on the software side is where we want to be. The infrastructure always changes, and NVIDIA's in the lead by a long shot today, but we don't know where that's going to be in 2-3 years. And I'm not saying NVIDIA, but are we doing inference, or are we doing training still, or some of those nuances? But it's a commodity at the end of the day, even though it's a hyper specialized commodity. I get that, but we want to be in the software names.
Sean, what about overseas? Well, what about the China names? Because we're seeing a lot of companies over in China, obviously. DeepSeek maybe started it to a certain extent, that it's always been like Silicon Valley and the best tech innovations coming out of the US. There's competition all of a sudden, and these China names are all still dirt cheap. Are you looking at any Alibabas? Are you looking at any China names here as opportunities when the US market has so much uncertainty in it? Or is the tariff scare you away from those? What are your thoughts on China tech?
Yeah, no, less so about the tariffs that would get us concerned. It's more honestly the structure of the name. So you probably know how they structure their their investments in VIEs, variable interest annuity or entities. And in theory, you own a shell of the Chinese company. So that's ultimately what keeps us away. Alibaba is a great name. Some of the other ones are great names, and from somebody sitting very far from the actual consumers of many of these products, it's very hard to judge the actual demand there, but also looking at it from just a risk management perspective. We don't want to get caught up in you could argue the tariff war, right, in terms of impacting the ability to the government in China to remove some of these VIEs. And in theory, you don't own any of the actual underlying companies. So that's ultimately what keeps us away. I know some of your listeners here are asking for names for software. I'll quickly go back to that, but we like Zoom. We like Salesforce, as we don't own it, but we do like Zoom. Meta is a good name. It's not software, but just throwing out some names for some of the listeners.
Hey, Sean, you mentioned software names, which I find really interesting. And that is also, it's got a growth component, which growth has been, under pressure. But I don't think you can tariff the software companies as much. Any names that you're watching in particular in the software group?
Yeah, back to it. I mean, one of our favorite is Zoom. It doesn't sound too sexy, right? But the here you have a company with $8 billion of cash. You have zero debt. All the tracking that we do shows that they're seeing improved demand here recently, using credit card data. Their enterprise business is doing well. We think, tariffs impact it from the ground up, meaning, if the cost of compute, but again, semiconductors have been excluded, so that, doesn't necessarily hinder it. In some ways it's a benefit, right? Because, if the cost of things inside of these platforms are going up and you're a software player selling payment services and payment, the actual nominal value of dollars going through payment platforms are going up, that's a net positive for, the software players and payments. Software, again, within the enterprise, Zoom's our favorite because it's the most dislocated from a valuation perspective. And that's kind of like our favorite today from just a pure software player name. We also like, it's not software, but it's, more internet, I guess, is how you would categorize it. But, Zillow, we think over the next several years, we're coming off a very low base of housing demand with still tight supply. And, they grew 20% roughly last year in a market that was flat for housing. And we're coming off those lows pretty aggressively, and we're tracking touring. And, you're seeing touring, higher than 2021 levels, which is pretty crazy. And that's real-time data that we're tracking. And we think as rates go lower, there's this pent-up demand for housing. I know people that have been sitting on their hands for 4 years, and now they have a 6-year-old, and now it's time for a yard. And at some point, they have to pull the trigger to buy a home. So anyways, that's kind of like some of the names that we think are interesting that are, likely can benefit, even in these environments.
Yeah, I got something that I'd like to discuss with you. And Rocket, going to the whole housing and XHB. Actually, we were taking a look at the chart on that. Rocket companies being extremely aggressive with acquisitions in this market, going after Redfin, right? And then making a Cooper, I think it's another acquisition here. So in the eye of the storm, making some big acquisitions. The stock was rewarded for it yesterday, but talk about, continue to talk about like Zillow Group or Rocket in this realm. I mean, is this the environment where people are going to be looking to be buying houses? I mean, are rates going to come down? What's going to be the catalyst?
Yeah. So one is, where we are from just a pure perspective of housing sales, right? We sold, roughly the ongoing rate was roughly like 3.9 million homes sold. The last time it was that low was really the financial crisis at the lows. The peak we saw a couple of years ago. Again, I'm not sure that's, the bar you want to set, but, that was roughly 6 million. We average, 5 million homes. So, going from like 3.9 to 5 isn't totally irrational as, things normalize. And then obviously part of what happened in the last couple of years was a shock to rates, which was a shock to, demand. And even in that environment, someone like obviously Zillow did well. Rental market, which is 30% of their business now, is growing roughly 30%. And so that is countering some of this, housing demand that's happening out there. Because if you're not buying, you're renting to some degree. So, they've kind of insulated themselves to be on either side of the coin. Rocket's a good question. I mean, look, Rocket's a great company. Being just strictly tied to mortgages is clearly I wouldn't say a dangerous business, but it's a highly cyclical business. And so moving into, other means, which is, the search side of it, which is what Redfin gives them. And then moving into the servicing side of it, which allows them to like drive this feedback loop, makes a lot of sense. They're really good at product engineering and service at Rocket. So, the price tag was huge. It was like 2-3x like their market cap in terms of how much they've been spending here. So they're taking a bold bet. But if you look at somebody, I think what's happening here is it's consolidating. And as we all know, when things consolidate, there'll be multiple leaders, but those leaders tend to win even bigger. We saw that in, other areas of, big markets like, tech and such. So.
All right. Before we let you go, boy, news with Elon Musk and the whole EV debate, with volatile price action. Where are you at on the whole EV debate and Tesla? What's your outlook?
Yeah. Obviously Tesla is somewhat of an isolated name in the EV space, given, what Musk is doing. The moves here recently, some will pin that into, on the political side in terms of, there's political risk to some degree, but I think actually like there's been fundamental risk here in the last year and a half beyond, the politics. If you really look over the last, year and a half, 2 years, deliveries and production have really come in, at the lower end, and, they've continued having to bring that bar down. So this goes beyond, just the last 2 months. So I really, truly think there's, fundamental impacts here. that are taking place. You have obviously BYD and some of the, the Chinese players doing really well. They don't come in on our turf, but they do get sold in, other countries besides US. So international is a risk. If you think of, the risk of China in terms of like tariffs or even demand, they make, a good portion, if not the biggest portion, comes out of China. So that's, obviously risk. But, the Tesla story, once you start reading, some of the people that are bullish this nowadays are isolating the AI and the optimist opportunity, which again, it's almost like you're moving the goalposts of what you think matters. And a lot of that is embedded in the valuation. I mean, again, the multiples above, Ford and GMs and some of these others. I'm not saying those are great companies, nor do I think, Tesla's only going to be, a car company. I think actually there's a lot of tech-enabled stuff. If you ride Waymo, look, Waymo's the leader in autonomous vehicles. I've ridden in 50 Waymo drives. It's an amazing experience. And they're the leader in that space. So it's hard to say, Tesla's the leader. Then there's other players out there, like Mobileye that's, partnering with Volvo. And then you have someone like Aurora, which is doing it in the trucking space. So, people are coming at them in different ways. And then, don't forget about the eVTOLs, which is the electric vertical takeoff and landing, which I think is going to be a big market in like 10 years. But still, if you're underwriting Tesla with AI and Optimus, I mean, you're going 10 years plus anyways. So in that same time frame, I think we get flying electric vertical takeoff and landing. And, you have Archer Aviation that's launching this year with in Dubai, and then Joby as well. So I think it's pretty interesting, dynamics happening in the EV space. And I bring up the vertical takeoff and landing because it's transportation, and that's really what matters.
Okay, Sean Emory of Avory and Company joining us here on Pre-Market Prep. Thanks a lot. We'll be dialing you up again real soon.
Awesome, guys.
Okay, continued. We just not really catching a bid here. We've had a bad half hour in the markets, been trying to recover. I can give you that overnight low, 54.81. That's the only thing, unless you want to drill down on your shorter term charts. Current low, 54.81.
Yeah, there's some, speaking, I mentioned that we're going to get headlines all day today. There was a headline out by Lutnick saying that if countries retaliate against the U.S., then tariffs will go up further. What you saw is equity prices take out their lows again, take out the morning lows, I should say, and the VIX cranked up to about 27, a little bit off that level, but I think that's what you can expect. That you're going to see a lot of these headlines today.
Yeah, I think I'm still in the camp. We've tried to rally a little bit here overnight. We've tried to rally a little bit, this morning a couple of times, and rallies are failing. Like you get 20, 30-point rallies. And we had a 50-point one last night, off those lows, which was somewhat substantial. Joel actually was a little bit higher than that, maybe even. They keep failing here. So that is a concern. I think I am not thinking about buying the dip here today. I'm not thinking about, wow, what an opportunity. All these stocks are on sale. I'm actually looking like if we rally up, I'm like from a trading perspective, I'm 35% cash in the long-term account, probably not selling anything out of the long-term portfolio. But, short term, I'm looking at putting on like potentially, shorting into strength here. If we get some rip-roaring little rallies here, one off the bat, use that opportunity to maybe play some strategic shorts here. I mean, you got too many stocks breaking down, making new lows. I always say when stocks making new lows, you got to go. It's hard to think about going long here right now.
I think as well, like, investors, traders, we have multiple tools in the toolbox that we could be using. For example, I would be looking at, options a little bit today. I mean, I know options are going to be more expensive with the VIX doing what it's doing at 26, but you can mitigate that with spreads. But what's the, I'll turn it over to you guys. What's the advantage of options versus stock in this type of a market?
Well, your risk. Like how much you're losing. You're losing the premium. So, I mean, and you can use spreads. There's different ways to try to bring in, because obviously the premiums are really jacked up right now. But, I mean, it's controlled risk, because so many people get themselves into trouble. They're like, well, I'll buy here, and if it goes down here, I'll sell. And then it gets down there like, well, I don't really want to take that loss. So I'm going to hold to the next level and hold the next level. And all of a sudden, well, now I'm down too much, so I can't take the loss now. I mean, at least with the options, you know what you can lose, right, Christian?
Yeah, that's a point that I was getting at. Options, don't forget, are used for speculation. You want to speculate on you think that these are lows to be bought. The option premium has an adjusted stop price in there for you. That stop price is zero. So whatever you put in, it's giving you your stop price. And like that's I'm not suggesting everyone go out and buy options this morning, but I'm suggesting that you've got to have, like, if you're going to take that approach where you're buying the dip, think about things not just as a trader, but you got to think about things as a risk manager. Where's your out? Where are you going to get out of something? So, the options where I don't like advocate, like, with the VIX this high, doing, going out and buying options like crazy, but at least, like, you can only lose the premium. You can't lose any more than that. And for some retail traders, I think that they need to have a built-in stop on some trades.
Excellent point. And also, spreads too. I mean, you don't get as much a bang for your buck, but at least you're here on the other side of things, bringing in the premium. So, continuing to leak here. I mean, there's other topics obviously we can cover, but the tariffs and the macro environment is definitely dominating things. After we just dipped under 5,500. We did have one
Restoration
earnings.
Hardware earnings, Joel.
There
We
you
can
go.
just say those from last night. It's down 31%. It's down 78 points. I know you had some commentary from the call, Christian, that you maybe had a little bit of color here, but the color is you reported on the absolutely worst possible day to ever report on. Like, in the last 5 years, this is probably the worst one he could report on. It's down 31%. Eye of the storm. They probably buy stuff overseas as well. This is expensive stuff in this store here too. I mean, if you're thinking about economy slowing down, this is not the place to hide out. And just been continued selling pressure all morning. And was there some commentary you wanted to highlight, Christian, from RH?
I think just that the CEO was mentioning that this is going to be an adjustment period, and he thinks that the CEO thinks that they may have to over time. They may have to diversify away from regions, but I mean, it's a mess, and expensive or high end, home improvement. We were talking about the dollar stocks and retail there, and they're even getting hit. Like, I was watching Walmart. Walmart gets a lot of products from China too. Like, so I know everybody's looking at the ones that are like firmly like in the crosshairs, but even like something like Walmart, which you kind of think might hold up better today, not so much because of where they're getting their product lines.
Yeah.
Wow,
It's a tough
Walmart.
day. It's a tough day to be an investor. And I think, as a trader, these are exciting days. But again, we're not all traders. We're talking to a lot of long-term investors here too. One thing I would say is if, you're just buying for the long term, we got to just like talk to the long-term investor here just for a few seconds. If you're like long-term, dollar cost averaging into the market, over time, the markets do seem to always come back. I don't know how long that takes. There's periods, and believe me, there's periods of like 12 years from 1968 to 80. There's also the period of like from, I think it was like 2001 till about 2011 or 2012, a good 10-year period where stocks did not go up for 10 years. So there are these periods. I don't know if we're entering that period. I don't know we're not either. So that's why I'm not coming here and actively buying, but I say if you got 25, 30-year time horizon, over that long of a period, the markets have always come back. So maybe, you're dipping your toe in and just, buying good companies where you see a reasonable valuation. But short term, I still think you could have a lot of pain here ahead.
All right. So do we even want to talk about this TikTok Amazon thing? Is that just irrelevant here at this point?
Well, it is for Amazon, unfortunately, and Amazon is one of the biggest positions in my long-term portfolio. So I'm getting hammered here too. I mean, lots of stuff getting sold, and retail is in the eye of the storm, down 7.5%, making new lows on the move. I mean, Amazon, it was 25 times, 26 times, coming down to the most reasonable valuation you've ever seen on Amazon. But it doesn't matter when the economy is teetering on potential recession here, and we don't know where this trade war is going. Headline-driven market continues. So I don't know. You can talk to TikTok, but even if Amazon or something, somebody gets that and gets a little pop from it, I don't think this is going to move the needle for Amazon.
Yeah, Amazon coming down to Well, beyond the low of the move, 187.20 was no, excuse me, 184.40. So you can use that as resistance as we're trading at 181.80. S&P's down a little over 200 handles here. Wow, wowzer! And the day hasn't even started yet. Christian, any closing comments?
Sure. Closing comments. Watch the VIX. Watch what the range. Try to separate the headlines with the price action. Price is most important here. I think that will give you a good visualization. I don't like that we've broken the lows for the week, so it's risk off. And I think when you look at the names that are up a little bit or green, it's very risk off names like AT&T. I mean, these things that's the way that this market is going to react. I think it's important to emphasize too, which I know a lot of people are saying, nothing great happens below the 200-day moving average. While the price is below the 200-day moving average, sell rips.
Okay.
Okay.
We're gonna wrap things up for today. Head over to the STN room to cover this historic open on Wall Street. Joe Saluzzi joining us tomorrow to talk some market structure. Folks, be safe out there. See you tomorrow morning.